Well, I'm going to introduce to you Rear Admiral Paul Becker. Served 30 years as a naval intelligence officer in peace, crisis, and combat, with assignments as the Director of Intelligence for the Joint Chiefs of Staff, the U.S. Pacific Command in Hawaii, and the International Security Assistance Force in Afghanistan. He is an adjunct leadership professor at the U.S. Naval Academy in Annapolis, Maryland, founded the Becker T3 Group, LLC, back in 2016, a service-disabled, veteran-owned small business focused on global risk management, business intelligence, cybersecurity, and organizational leadership. He is a motivational keynote speaker, experienced board member, author, translates military leadership principles into corporate pillars of performance, productivity, and profit. Presidential transition team leader for intelligence, strategic planner, risk manager, talent developer, cybersecurity professional. Trust me, folks, there's more. It's unbelievable. Corporate governance and oversight expertise. Built and led large, diverse international teams in peace, crisis, and combat, and also is a recipient, as you can well imagine, of numerous awards and medals. We are delighted to welcome Rear Admiral Paul Becker. That is quite a list, sir. Congratulations. Thank you for your service. Delighted to have you on board with us this morning.
It's my honor. I wish I had more to say than just the introduction of Ken Moelis, but Ken's a prominent figure. In fact, he's a paragon of investment banking. He has been so for 30 years. So he's uniquely qualified to introduce his panel that's going to talk about investment in space. So Ken, over to you.
Well, thank you, Paul. And thank you for having me. And by the way, I've been doing this about 40 years, and the highest I've ever gotten off the ground is about a foot when I was a basketball player in college. So this is a whole new level of a process for myself. We have a great panel. Let's see if I see them on there, but I'll introduce them briefly, and then we'll try to bring everybody in by conversation. So first, André Pienaar, the managing partner and founder of C5 Capital. C5 is a specialist technology investment group that specializes in data secure ecosystems and has become very active in VC and space experiences. It's Kam Ghaffarian is with us, the founder and CEO of IBX. I've gotten to know Kam pretty well over the last year. I would use up the whole hour if I took you through everything that Kam is involved with, but let's just say very involved with both Axiom relative to space, Intuitive Machines, and several other ventures. Jeff Crusey, investment manager of Seraphim Capital, large, one of the global leaders, in fact, in space tech investment, large space VC presence, and focused on the seed stage and runs an accelerator. Matt Kuta, who was the co-founder, president, and CEO of Voyager Space Holdings, and even more important to me, a former Strike Eagle pilot, I guess. Voyager Space Holdings is a global leader in space exploration, and now doing, prior to that, he had a lot of private equity experience. And Jordan, I assume it's Noon. I was going to say that's a terrible last name. I don't want to say no one. George Noon is co-founder and chief executive officer of Embedded Ventures and a board of advisors for Genesis Systems. So first of all, I wanted to thank everybody for being there. Oh, now I have everybody on my screen. So pleasure. Why don't we start because, and I could tell Kam and Andre are in the control room down in Houston. So it's very, very exciting place. So I'm going to start with Andre because I've been to that control room. And I thought really just to start, because it's been literally, I've been in the field for 40 years, and I think it was 50 years ago to this day that I watched men land on the moon. So, well, 51. Why now? What is all of a sudden driving a surge in private sector investment in space? Why 50 years later, and why so relevant today?
Ken, thank you. I think there are a number of drivers behind the boom that we are seeing in private space investment, and there are different estimates of how much capital was deployed into the space sector by the venture capital community last year, but everyone agrees it's several billion, and that we've seen an exponential increase in the amount of capital that's being deployed, as you said. I think one of the key drivers, of course, is the success of the SpaceX launch capability in the US last year and the success of the SpaceX mission to the International Space Station last year, which captured the imagination of the country and of the business community. I think very closely related to that is the fact that there's a huge curiosity about space that's being fed by all the discoveries that has been made through all the telescopes in recent years, and in particular huge interest in whether there's extraterrestrial life in our broader universe as part of that human curiosity about our universe and our galaxy. And then at a very practical level, the development of the low Earth orbit economy around the International Space Station has become very real. The space station has been established for more than 2 decades. We had the 20-year anniversary last year, and the range of projects and research that's being done on the space station, I think, has demonstrated the capability of space to create value.
So I'm going to switch to Jeff for a second. So Jeff, you're kind of in the seed part of this. It sounds like earlier, was there a seed economy 10 years ago, 7 years ago? And where did the money start, and where do you see it developing over that time?
Yeah, it's a great question. I think it developed independently in a few different areas. Here in the UK, where Seraphim is headquartered, it was born out of the government trying to spur innovation around a satellite cluster that was forming in Surrey. So there was a lot of expertise building up within the university, and they decided to see if they could help commercialize a lot of that technology by funding some new investment funds. First at the angel stage, then moving on to seed stage. Now we're actually at closer to Series A, even some exits, thankfully. But then in the U.S., I think a lot of that was actually driven by the interest in rise of success in SpaceX, and as other investors saw that success materialize, they began to pour in the investment or refocus their investment dollars in that direction.
So Jeff, was there a seed investment business 10 years ago? 7? I mean,
I barely, not really. I think it was more of an angel effort at that point in time. There were a very few VCs actually focused on the space tech.
It's interesting how fast it's moving, and and by the way, feel free. I want I'll open up, make sure you guys talk with each other, but to what you call, and it sounds like the explosion and all this happens around SpaceX. And I was talking to Kam once. We talk about the how the government and the military works, but it almost seems like this explosion traced back a little bit to the Obama's administration to de-emphasize going to the moon and freeing up maybe talent, maybe expertise. And I just wanted to go back to that a little bit. We talk about working closely with NASA, but was it a little the reverse? And I put that in front of Kam because I know he started a lot of his companies around the expertise that actually freed up. So interesting dichotomy between government helping and also freeing up the talent.
Yeah, thank you, Ken. I actually think it got started prior to Obama. I believe during the George W. Bush era, there was a NASA program called COTS, right? Which one of the awardees actually was SpaceX. And that sort of really got this whole thing going because basically the government said, hey, we're going to be, especially NASA, we're going to be an enabler for commercial space to grow, and therefore we're going to partner with some of these commercial space companies. And I think that's where the COTS program, I believe, was when it got started, and SpaceX was one of the awardees. Of course, Boeing was, and so on and so forth. And then during the Obama administration, this sort of grew even further, right? And then there was, more interest in that areas from the government perspective, and more companies sort of jumped in. And Elon sort of took full advantage of that as part of the COTS program, and actually, in many ways, enabled his company to prosper.
So, Cam, I'm gonna put you on the edge here because I think you and I are about at the same age, and everybody else, it seems, from the last panel to this, there seems to be a few years gap. But if it wasn't for Elon and even yourself, we're talking about finance. Was all of this, was there capital available? I think you self-financed for a long time. Where did you even go? Take me back to those early stages. Where did you even start to look for capital?
For me, I wouldn't consider myself as a typical investor. I would say I'm a dreamer, right? So I had this other company. First of all, I've been in the space program for 40 years. I think I was born as a space cadet, right? and my dream is being part of the space program. And, I was running another company at the time called SGT, which is a government contracting business, and we ended up being the second largest services provider to NASA as a whole. But maybe 10 years ago, I started really thinking about, hey, there may be these companies on the commercial space side that can prosper. And the first company started was Intuitive Machines. And, our idea with Intuitive Machine is it sort of has morphed and expanded and shifted, but the original idea was, let's take some of the NASA technology that's been developed, whether it's sensors and others, and commercialize that in medicine, in energy, and in aerospace. That's how we really got started, and that's how Intuitive Machine was born. And I was able to hire Steve Altimus, was the former head of engineering at Johnson Space Center as the CEO. But from the investment perspective, I decided that I was going to fund the company myself. So I provided all the funding. In fact, in the history of Intuitive Machine, there has been no other money except what I've provided so far. And we've come a really long way. But I tell you this, I remember having a conversation with my CFO when I was ready to sort of deploy some funds, with Intuitive Machine, and he did some analysis, and he says, "Cam, you're crazy. What the hell are you doing? It's sort of like you're throwing some money out there, and all that." But it comes to in fact, IBX, right? Stands for my family office stands for Imagine, Believe, Execute, and I think the believe part is a magic ingredient in my opinion. So I've always been a believer. So I sort of believe that there's a future here, and sort of jumped in with both feet.
Okay, so I'm going to go to Matt. So Matt, you do this for a living. You had started with private equity. In order to do this for a living, do you need to be a space cadet who has magic? Is that your pitch? Is Cam's pitch to your investors that that we're space cadets with magic? I'm half kidding, but the question is, how do you take private equity expertise and actually fold it into an investment where I got to believe the payoffs are decades in the future? Or walk me through it. Matt is not.
Sure, Matt, he's having some issues joining in. He'll be joining us shortly.
Okay, is Jordan on? Maybe he can.
He's also having some issues, sir. I'm not sure he'll make it, but Matt will be on shortly.
Okay. Well, so maybe I'll ask Jeff then. I was curious. How do you go raise? I mean, it was kind of a funny question, but how do you go raise the money when the payoffs are so long and speculative? What do you talk to about? And by the way, who are the investors in seed funds? What kind of background?
Yeah. Just to be clear, we're actually primarily focused on Series A. We do some seed, but yeah, I think where does the money come from? Well, first I would challenge the notion that there are these really long time horizons to commercialization. I'm not sure I quite see it that way. Not to say that you're wrong.
No, I could be wrong, by the way. I'm willing to You're the expert.
Yeah, so we're already seeing companies today that were only born a few years ago that are already generating, substantial revenues. Early stage by comparison, to the international field, but companies like Spire are experiencing substantial growth, even by comparison to like their consumer or software counterparts. But where did the money originate from? Well, I think first it was government, and we probed a little bit of that, in terms of how NASA wanted to commercialize a lot of their technology that was sitting within their silo, and move it outside. And so there were programs years ago where the federal government would actually invest in funds that would place investments in those companies that were being spun out of government organizations and agencies. Not sure it's as popular today because there's actual commercial interest. So we're actually seeing more of the stakeholders who I think were the ones that came in next. Companies like Boeing, Airbus, SES, Viasat, to name a few. And hi, all my Viasat alum. And then I think what followed that was the probably less informed investors, but also amalgamated with people with real experience in aerospace that joined efforts to put commercial dollars towards space tech startups.
And Andre, going back to you, I know you started the fund really with a more bent on cybersecurity and cloud computing, and I think this has become almost an outgrowth of it. Have you found this to be of interest to the same investor base? Is that driving some of it?
Ken, the venture capital community has been very focused on B2B software in recent years and have made a lot of money from it. Critical infrastructure like we have in space has been less of a focus, but we are seeing an emerging group of VC investors who understands the very important role that space is playing in the whole digital transformation process. And in the cybersecurity market that you mentioned, for example, it's very clear that space is the high ground of cyber, and that ultimately cybersecurity will be determined in space and in the space domain, and that these domains are actually not, you're not able to separate them. GPS is the best example of that. One of the great acts of altruism by the US government to make GPS available to everyone. We are now all dependent on it for every aspect of our lives in terms of time, location, and navigation. That's all determined in space, but it affects your laptop, it affects your iPhone, it affects your ATM when you draw cash. So the space domain is just integral to everything, and I think it's all part of the growth of the low Earth orbit economy and how that low Earth orbit economy is becoming a major area of growth in the global economy. And that's really where the opportunity lies in the near term for VC and private equity investors.
Is that where you see, Kam, Andre, you see most of the interest in low Earth, low orbit economy as investors? Is the money separated yet into lunar, low Earth, further exploration, Mars? I mean, is it segmenting that way? When you visit companies, do they actually look at it that way? Or financing sources?
Yeah, so was that question for me, Ken?
Yeah, I was between the two of you. I was wondering how, because I know you're in various segments, and I was wondering, do you see the money segment?
Absolutely. Well, from my perspective, right, my investments are low Earth orbit, lunar, and beyond. From the space perspective, from low Earth orbit, I believe, like Andre stated, that there's this huge what I call LEO space economy that's growing. And my company, Axiom Space, really is a frontier in that. As you know, we just recently raised $130 million, and we're making a great deal of progress. Next January, we're taking private astronauts to space, and followed by many other missions. And that's just sort of a fraction of our business case. We're looking at doing so many other things in space, from, like Andre said, 3D printing, bioprinting, let's say satellite servicing, satellite refueling, even printing satellite in orbit. okay, and connecting that to cybersecurity, cybersecurity in space, even cloud in space, debris management. I mean, there's this whole lines of business as part of what I call, LEO space economy that I think is growing by leaps and bounds. And in some ways, it's sort of like early days of internet. I think there's a huge total addressable market there. And in fact, I'm working in some other areas in terms of creating even a platform, for payloads and things of that sort, right? And then you go beyond, the low Earth orbit or maybe even the polar orbit, right? Then there is this space lunar economy, right? And so we're going to be, and Intuitive Machines is going to be first commercial space company landing on the surface of the moon later this year in November. We're so excited about that. In fact, I am at the Intuitive Machine control center, which is one of the most advanced control centers right now in terms of commercial space. And so there's this whole economy around moon as well. Taking cargo to the moon, providing communication satellite around moon, bringing things back from moon on the moon, even creating a habitat on the moon, and all of that sort of is interconnected. One of my other companies, X Energy, we're working on space nuclear. We're providing fission surface power, for example, on the surface of the moon, as well as maybe nuclear thermal propulsion or nuclear electric propulsion to be able to make all of those economies real. But there is this huge addressable market, not only in a low Earth orbit, but also in a lunar orbit, sort of the most adjacent area. But I believe, this is now much longer period. I believe that there is this longer, market out there. I have this nonprofit organization called Limitless Space Institute, where we're looking into human interstellar travel. It's not going to happen next day, but looking at it from the nonlinear means, and it's a educational institution, and not only that, to inspire the next generation to look into this kind of thing. But specifically to your answer, I think there's in a short term, there's this low Earth orbit economy, space economy, as well as lunar economy, with a huge total addressable market to look at.
Yeah, welcome, Matt. I think you just joined. Are you?
I am. Hey, Ken.
Good to have you on. Okay, Matt. So I'm gonna jump in there and ask you. Well, we've got a question from the crowd, and I was gonna ask Jeff, but I'm gonna hit you with it. It's because you're
great.
So I think Sebastian Asprell has asked, I think, two questions that from the audience that are kind of interlinked, which is one, if you were managing an early stage startup in the space sector, what would be a practical step-by-step plan to secure finance and develop technology? How do you start? Who do you visit? I guess is the question. How do you get going? And I thought the other one, and I think it's both for you and Jeff, and I think it's a good one. Kam just was telling us a series of really, to me, unbelievably exciting ventures. And I think the other question is, how do you go through a checklist? Somebody comes to you with the, vision, excitement, talent. What's your checklist? And I'm only inundating you with questions because you're late to the party.
Yep, no, I deserve it. Yeah, great questions, and I think a couple considerations. The first one, maybe not as obvious, but I would think about incentives. Think about what the entrepreneurial's trying to achieve, what their long-term vision is, and think about what the investors' incentives are and what their time horizons are. So the summary is everything in space takes longer and is more expensive than everyone always initially expects. There's administration changes. Sometimes these things are heavy on the CapEx, which as you get further mature, if you start talking to private equity firms, is like a curse word because it reduces free cash flow. So when you think about who to approach, I would think about what are they going to want? Like, when are they going to want their money back plus a return? Are they a short-term investor, maybe 4 to 7 years, like a traditional fund structure, like a venture capital fund? Or are they like a high net worth, family office type that maybe have a different time horizon? So really think about that, because when I look at companies, one of the biggest ways I see some of these companies get themselves tied in a Gordian knot is they have a very misaligned, convoluted cap table where they have different share classes of different shareholders that have different competing interests. And the entrepreneur has been diluted down to a point where they're still a substantial shareholder, but they're no longer in control of the company. So that's kind of the first thing I would highlight. And as far as the checklist goes, for us, Voyager specifically, it's a little bit different if it's a venture capital, maybe. But I think at the first stage is who are you getting into bed with? Who are you working with on a business standpoint? I mean, if you're going to accept money from people, you got to think about who those people are. So conversely, for me as an investor, if I'm going to allocate capital to that person, I want to make sure that they can actually handle the capital. A smaller team, if you give them as much as $10 million, it might be an unwieldy beast. And next thing you know, it's spent on things that aren't actually accretive to their business plan. So the first is who the people are, what's the team? And then the other thing is I like to use the concept specific to the space sector. Well, maybe not specific, but this way I think about it is lily pads. A great example I'd say is on-orbit servicing. Everyone knows there's a space debris problem. Everyone knows there's going to be exponential number of satellites launched in the next decade. And it's kind of a tragedy of the commons right now, where all this stuff is going up, and it's really hard to find anyone that's actually going to pay to do any debris mitigation, unless it's forced by a regulatory body, which I think ESA is probably leading the way on that. But if you go out and say, I'm going to build a on-orbit servicing vehicle to minimize space debris, the problem is when you build your servicing vehicle, there may not be a market for you yet there, because everything is so kind of out in the future. So what are the lily pads that you can do along the way? What are the sub capabilities you can build along the way that give you viable business plans, revenue, profitability, so that in 2030, when there is a servicing market, you can raise your hand when the Pentagon or NASA or whoever says, hey, or a private sector customer says, hey, I want to start doing some debris mitigation. You can say, hey, I've assembled 7 of the 10 required bits and pieces, and now all I got to do is plug them together. So that's a couple thoughts there.
Jeff, you look at it the same way? You're on mute.
Very similarly, I think you'd be surprised to find. The first thing we always look at is team. It's really important to us that there's the credibility, experience, and depth to drive a business forward. And that's not just from the technical side, that's also on the commercial side as well. So it's usually a nice balance of, a CEO and a CTO that we're looking for, broadly speaking. But yeah, I definitely agree with Matt in that one of the challenges that we see oftentimes are companies just trying to go for the end game on year 2, when there are milestones and there should be a strategy built around that and a funding strategy built around that, and executing and gaining heritage along the way. So you ultimately do end up at whatever that end game is. And then one other important point that Matt also pointed out was investor syndicate. There are a lot of people that want to invest in space. I think there are not a whole lot that have experience investing in space and understand how to navigate a company from inception to exit. And I think it's important to have those investors that can help you do that, but also have the deep enough pockets to get you there, because there will be bumps along the way, bumps in the road along the way.
Can I ask on the investor side of this? So I'll leave Kam out for a second. Just how do you technically evaluate it? I mean, there's a lot of science and there's a lot of, I would assume it's very expensive to be expert and have deep expertise in each of these things. So I'll start with Matt again, because, where do you start? Do you go to outside consultants how does the confirmation of technology start with you guys?
Right. There's a couple things that we do. One, sometimes folks will say, oh, well, there's no customer, but they're under contracts because it's with the DoD and they don't give them credit. I'm like, well, if they're under contracts, they have some sort of market validation somewhere. Even if you look at SpaceX, it's like, oh, that's the shining star of the commercial space sector. And people say, oh, I work with SpaceX, so it's a commercial customer. But if you just look under the hood at SpaceX, most of their stuff is with the Air Force and the Pentagon or whoever they're working with. So it's not like, XM Radio is paying for launches all that much to launch geosats, telecom stuff. So along those lines, we have a chief technology officer in-house at Voyager who's kind of I used to fly the F-15 and it does lots of different things. And we would say, jack of all trades, master of none. So that's kind of what we'd look for in a CTO, someone who knows a lot about a couple different things and can assemble the proper team. And so for us, we have for example, an advisory board that are all equity holders that we leverage very, very deeply. So we have 4 astronauts on our advisory board who will say, hey, you've been in a space station. This company wants to put this in a space station. Is this a good idea? And they'll say yes or no, and they'll spend time on it. We have folks that do stuff inside the national security world, inside the civil space world, and we'll bring them in because space is so broad and complex. You can never have a single person that can help you with diligence. So we'll kind of form a tailor-made team for each specific company.
André, you're
Ken, tapping the right expertise, clearly a key part of the solution. We have operating partners like Rob Myerson, the former president of Blue Origin, who has a deep network in the space sector and years of experience, and also operating partners with national security experience. And then I think coming back to a point that was made earlier by one of the other speakers, I think evaluating the team and the prior experience of the team that you're investing with is really important. So, for example, in the case of Axiom Space, you have a world-class team who's been building and operating and running missions to the International Space Station for more than a decade, and really the deepest bench that you can want on this one particular subject. And so when you do your technology due diligence, you just know you're talking to the best. So I think finding those teams that have a depth of experience and deep engineering experience and management experience around that's really crucial.
So let me go to the next level. Anybody finding any interest in, and maybe Kam, you're experiencing this a little because you're further along, but in debt financing? Has that reached, I mean, we are talking about various places. I take it it's almost all venture, but is there even any venture lending? I'll open it up to anybody, but I know Kam, you're probably financing it.
Yeah, I mean, we just actually within the last few days negotiated a debt finance, a venture debt finance. So we were actually successfully were able to sign a term sheet in that case. So it is available, but again, just like André said, the venture debt finance also, they look at your team, they look at your business case, they look at your financial viability, and it's not cheap. However, as maybe a bridge to the next level, I think it's available, and we've been able to successfully manage it.
Ken, I think that the range of sources of finance that are now available to space startups have really broadened. Everything from venture capital investment, seed stage, Series A, growth stage, private equity, financing, debt financing, and of course, something that you're very familiar with because Moelis is a world leader in this, SPACs. SPACs as a new technology that helps fast-growing, innovative companies come to the public markets. I think it's also one of the new, very important potential sources of funding for the growth of space companies and bringing space companies that are exciting to the public markets much earlier. So I think there's a much broader range of potential sources of financing, including the U.S. government. The Air Force has its own venture capital firm Kuta has been very well established for a long period of time. And of course, Seraphim has had the support of the British Business Bank. So we also see governments becoming more active in the VC asset class.
Let's open it up to a little SPAC talk, because obviously the public is very interested, let's put it that way. Do we see it changing values as early stage as you, Jeff and Matt? Are you already being hit with the, well, if I do this, this, and this, here's my exit? It's a different exit source. It's quicker, and it must be changing some of the evaluation.
Yeah, good question, Ken. It's interesting. You know, what I tell other companies is that if you were on a path that you could eventually or are prepared to at this time to do an S1, you know, the old fashioned way, but then you decide to veer off to do a SPAC because you think it will accelerate your timeline or enhance some sort of capability to maybe the dynamic of your team, then that's probably okay. But were the companies that go down the SPAC path that never would have been able to be a supportable S1 public company, I think those are fraught with danger, particularly when you think about the warrant overhang of the share price potentially decreasing. You know, the founders and the internal shareholders really bear the brunt of the risk there. So now I think it's changing valuation expectations, but I think it's going to be short-lived. You know, I don't know how long this is going to last. It won't last forever. Companies that are, you know, zero revenue can't support a multi-billion-dollar valuation forever, is my thought. I couldn't have built that financial model, but you know, it's interesting. There's companies you talk to now that everyone thinks that they can do a SPAC, and even if you do a SPAC, it's not easy, right? Like you have to have your PCAOB audits done, and you have to have the infrastructure in house. Like it's not like you can just overnight merge into a SPAC. So, and that costs money.
Jeff, you seen it?
Yeah, actually, one of our companies just started trading on the NASDAQ today, AST. So yes, I think in, you know, big picture, it aligns well with space, being able to heads down, work on your tech, long-term, capital intensive. Sure, that ticks that box. I agree with Matt. It is fraught with danger. There are some less scrupulous bankers taking companies public that have no business being public, and that could ruin it for others. But I also think, you know, there's also a competitive aspect to it where if one of your competitors, even less developed, SPACs, you're in a tough position if you don't yourself, because very few space companies can go out and raise multiple hundreds of millions of dollars in venture capital. Yeah, I think it's also a good thing, because there was always a big question hanging over space tech with where the exits would come from. And I think this catalyzed some of that for space tech. I agree with Matt. You know, it's not going to last forever. It can't. There's a little bit of a long detonation on it, given, you know, the pipes somewhat lock in the value for a period of time, not forever. But yeah, I think overall it's a good thing, because it will progress the industry more than it will do any damage. And I think it's analogous to maybe what we saw with clean tech back in, you know, the early 2000s or late 2000s, where yeah, there was some fallout when the IPO window closed, but there were a lot of substantially large companies that are still around today that came out of it.
Well, look, just adding from my point of view, because we are involved in the sector, it's not a magic, to those, you know, it's not a magic different thing, but what it does do is reverse the process, I think, in a way that the key is it allows you to get certainty quicker of funding. So you're not hanging out there with all these documents waiting 12 months for a market to change. And, you know, I always tell people I went public about 7 years ago. And it's the traditional way is a long process where you're hanging out there with your financials and your people and your whole zeitgeist of the company, and you're waiting to see if some market event distracts you before the pricing day, which is usually the final day of the deal. And a SPAC kind of reverses that. and brings to certainty the front end before you announce, and then you have to wait a while. So there are some real benefits to it. The other part, of course, for something like space is being able to use projections. I think people are in a regular IPO, there's no use of projections. And here you can go under the merger laws and show 5-year projections, which is a very obviously extremely important thing to try to explain your story. But lastly, to what you both said, Matt and Jeff, sooner or later, the quality of the company wins out. I mean, sooner or later, all that is process. And is it a great company? Did you price it right? And like all IPO markets, there'll be some significant winners and there'll probably be some significant problems. And I think that always happens. And we'll see at the end of this. But it is very interesting. And when people say it's going away, I think it's kind of a process that if the SEC doesn't change the length of time it takes from filing to pricing on a regular way IPO, that this will have uses for people, especially who have to show 5-year projections, who have to explain their story via some private conversation. And I do think it'll continue to drive capital into the industry. So, I was going to ask you, Andre and Kam, but I think I won't for good reason.
And I just wanted to share. I agree with your point of view. I think SPACs are here to stay. We may not have as many of them. It may be harder to raise, but I think SPACs that acquire high quality businesses are here to stay. And a very good example of that is a partner of ours, Iridium. Iridium is one of the leading low Earth orbit space companies today. They run a network of 66 low Earth orbit satellites. And Iridium in 2008 went public with a SPAC. So way back, more than 12 years ago, the company's been a great success on the stock market. It's demonstrated continued growth. And so I think SPACs are here to stay. And I agree that SPACs give another potential exit opportunity and another ability to raise significant sums of money for critical infrastructure development. And so overall, I think it's a positive technology for fast-growing companies. And we haven't had enough fast-growing, innovative companies going public in recent years. So there's an enormous appetite for companies that can help bring about change in the public markets.
Yeah, let me just, and then I'm going to bring a question to Greg, but I wanted to agree with you, Andre, on that. One of the things we're finding is we're going out there and doing third-party SPACs. We have our own, is that the big funds haven't had the chance to be in size in these companies at this stage growth. And I think that's actually something that we forget, that the lack of kind of early stage venture capital has cut some of the big fund managers out of their ability to get in at this stage. And they're very excited to be able to put up a significant check into these pipes and see the numbers. And it's really, if you think about it, 20 years ago, there were 2 times as many names traded publicly. I think that's an interesting fact. People don't realize that there were twice as many companies traded on the national exchanges than there are today. So that's the shrinkage of just places to invest your money, or the stage at which you get to invest. I mean, think of the later stages now at which people have gone public after several rounds. And so this is a whole new method for people to get involved. By the way, if you really think about it, I think there's about $4 trillion or $2 trillion invested and $2 trillion dry powder in private equity. Well, that was all money that really was diverted from the stock market in some way. And a lot of that is growth companies that are telling their story using 5 years projections and internal due diligence that the SPAC market is trying to make available. And again, I don't want to as in all securities, there's going to be good ones and bad ones, and it's going to be key to be careful about it. So one question that came out of the audience that I think is a good one, which is if you're a developing technology company, is there, and this goes to the investors a little bit here, is there a third party confirmation, they were asking? Is there a firm that is generally accepted as a confirmation? And I think the second part of that question was, and if it's paid for, by the company approaching you, is it immediately suspect because they paid for it and you didn't? So is it, become invaluable or not valuable solely because they actually did it, so not worth doing? So I'll open that up. Jeff, you look like oh, go ahead.
In the cybersecurity world, Ken, we see more and more third-party risk assessment, and these are companies that assess the potential cybersecurity risk in assets, and they're becoming something like the research companies in the bond markets, because they become a really important indicator of value preservation. But these third-party risk products are not paid for by the companies that are subject to them. They're really done independently. I'm not aware of something similar in the space sector, although of course, as part of our due diligence, we look at the importance of cybersecurity, and one of the reasons why we look at that also, of course, is because we are in a space race. China has been very aggressive in attempting to assert its leadership and dominance in space, and have been very aggressive in trying to acquire the very valuable intellectual property and innovation of both US and British companies. So in a cybersecurity context, we see that third-party risk assessment, but I'm not aware of a broad third-party assessment product in the space sector.
Yeah, Ken, in my investments that I've done in the past, I haven't been able to find like one company that does it all in the different areas. And I think Matt talked about this earlier. You sort of really got to cater to the technology at the company and have a group that sort of looks at the technology itself, look at the risk, maybe total addressable market. But from the technologies that we're talking about are really out there, and you really need to have the right expertise looking at it. We're not talking about the generalist per se. Like, just think about, habitat on the moon and all aspects of that. You can't just go there and, just ask, a general engineer to deal with that. You really need some, expertise. So I think you got to sort of cater where you want to invest and assess it individually, in my opinion.
So if somebody came to you with a third-party habitat on the moon study, you would start from scratch again. You basically say you would you'd have to do it internally.
I will use it as an input, but I will not rely on my investment solely on that. I will use it as a data point.
Yep. Matt, Jet, any?
I think they said it's right. There's a lot of data, a lot of different verticals that are fused. So, for example, interestingly enough, talking about habitats on the moon, Voyager owns the core intellectual property to convert oxygen steel out of moon regolith, which is moon soil. About 75 to 86% of all propulsion, depending on the type of propulsion, is simply just oxygen. And we probably saw recently some folks did that. China and Russia decided to partner up and build a base on the moon. We may want to do that too then. So, to create steel out of moon soil, we have that capability. And where that's at is, it's real, it works, but it's really hard to test something like that until you can actually put it on the moon. So some of this stuff is, and there's only like 3 or 4 people in the entire world that actually are even experts at that to even know how to even start with that, with both Moon and Mars. So it's pretty complicated.
I would add that there is third-party validation. There's also sometimes what I'd refer to as intermediate validation. So one of the things one of our companies did was, instead of getting full flight heritage for their sensor on a payload in orbit, they did aerial campaigns first to prove out part of the system. So something like that can verify in part is always something that we like, because it's strategic, it's scrappy, and sometimes it costs less.
All right, I think I got one more from the crowd, which I thought was interesting, and that is it all an insider game? Do you have to be from the space? If is there something to be added by somebody completely outside of the system coming with new ideas, or is that is there value in that? Are you looking for that, or is it kind of all inside?
I would say that it's really, really important to at least a Voyager that you have non-space people in space. You have to have the engineers and the scientists, of course, and maybe they chose to do that. But if you're going to have a viable business, you can't build a robot and not have any of the other infrastructure. So you need the business of business, right? You need marketing team, you need a PR team, you need finance, you need business development. And to be a successful business, you need to surround the technology and the engineers and scientists with the surrounding cast of people to help grow and scale that business. So if you're an English major, if you're an art major, great, then come help with marketing and PR. If you majored in finance, great, come work in the in-house finance team. Like just anything that you would need in any other company, like Pepsi, you need it in a space company.
Cam, if I came and wanted to work for you, you'd allow me, even though I can't add.
How much money are you bringing in? No, I think Matt is right. I mean, Matt's talking about other aspect rather than technology, which is the infrastructure piece and business development and all of that. That is important, but more specifically, the question, even on the technology side, I think outside ideas are very, very good. So if you think of sort of space, and there is a platform or maybe a bus, and there are different maybe apps that technologically can connect to that bus, to that platform, and so whether it's technologies that are not space related, that can sort of marry to the space technology and be a value added. And so we've been playing actually in all my space company with those kind of ideas and bringing outside expertise from other technologies. So if you are, let's say, if you are a robotics person, okay, or if you are a nuclear person, okay, or if you are a cybersecurity person or cloud person, or let's say you're even a digital currency person, okay, I think all of that could be part of the the future space economy.
Ken, I agree with Cam. We are just at the beginning of the growth of the space sector. China has predicted that the lunar economy alone will become a $10 trillion economy in the next few decades. Morgan Stanley has come out with some very big estimates of the size of the space economy. We're just at the beginning of the growth of this sector. This is a sector that needs people, ideas, and talent. And developing the workforce of the future is one of the great and exciting challenges about this sector. This sector is going to create more jobs than most other sectors in the coming decades. One of the exciting things that Cam has done is he's created a not-for-profit organization called the Limitless Institute, which is focused on helping to develop young talent and engage the interest of young people into the space sector and the possibilities of space and interstellar travel. And that's really the kind of visionary work that we need now to develop sufficient talent and people to fill all the jobs that are being created for the future.
Look, it's funny, having been a banker and seen a broad spectrum of things, I once asked a biotech CEO what was the toughest part. And he said, the toughest part was you start with scientists, but you have to sell. At the end, you have to sell what you made. And he said you don't find the same person. And he said many an early biotech firm just couldn't make that transition and also bring in the sales aspect. And I never thought of it that way. He said at the end of, no matter how good your product is, you have to sell it to somebody and you have to make somebody care about it. And so you can't get too bogged down with just one single aspect of any business as you think, like we're here talking about the financing, the size of the market and the technology and bringing it all together. So last question, we'll just go around quickly like a lightning round. I'll start on my top left with Jeff. Are we going to look back? I'm going to start with Andre's comment of a $10 trillion lunar market. 20 years from now, are we going to say, obvious, how do we miss it? Or, and it was much bigger? Or as Matt said, I'm going to bring Matt in, who said, it takes longer and takes more capital. So I'm going to put 20 years on that. What's your prediction?
I think I'm with you. The way I think about it is, to date we've been designing for the Falcon Heavy. We need to start thinking about designing for the Starship and what that world looks like, and what economies are enabled by that. So 20 years out seems reasonable to me.
Matt?
I think there's about 570 astronauts in the history of the world, and there's almost 3,000 billionaires alive today. So we're at this inflection point. We're going to send an exponential number of people into space off a low denominator. So with that being said, I don't think it's going to be a $10 trillion realized economy in 20 years, but I think we will have people on Mars in 20 years and people on Moons in the interim period. And that $10 trillion economy will be much more unlocked by then.
Wow. André? Kam, I'll let you guys finish. I'll finish with Kam. André, well, you said it. So was that within that time frame?
I think the potential of the space sector is limitless. It's an overnight flight to the space station. It's a 3-day flight to the moon, 7 months to Mars. Mars is the first planet we've now populated entirely with robots. The potential is huge, and I think in the next 20 years, this potential will be realized in a very significant way.
Kam, I know you're already past that. I know we're into further away than that. So go ahead.
I really believe it's just scratching the surface. I believe that, this is the, a final frontier, right? And one of the things, I just leave you with this thought. One of the things we're doing at Limitless Space Institute, creating a book for children, and it's called You Are Here. But you are here in the context of the universe, rather than the context of our solar system. And it's amazing to me that how many people don't know the enormity of the universe. I mean, for a long time, we thought that there were only billion other galaxies out there, okay? Billion other galaxies out there. And with the Hubble Space Telescope, now we know there are trillion other galaxies out there. And just within our galaxy alone, leaving our solar system in the Milky Way, it's 100,000 light years to get from one point to another point of our galaxy. And there are billion stars. So, we're just, on Earth, we're just this little dot. So I think when I sort of look at the vastness of the space and look at how small we are in that context, and then you're looking at, potential total addressable markets, I think André is underestimating the numbers.
Well, with that optimistic, Jack, I think our time's up. First of all, I want to thank the panel. That was great and very interactive. I appreciate it. Jack, I don't know if there's any other. I'm turning it over to you, I think, unless there are any other questions.
No, sir. We're just going to swap to the next panel.
Thank you very much.
Thank you.
Thank you.
Thank you.
Thank you, Ken. Thank you, everyone. Really appreciate it. It was fantastic.